Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Allie Canal. Let's get to the three things you need to know today. First up, tech stocks are powering futures higher this morning. The rally in stocks spurred by AI giant OpenAI, which just became the world's most valuable company according to new reports. OpenAI's valuation is now $500 billion after current and former employees sold about $6.6 billion worth of stock, boosting the company's price tag well above its previous $300 billion level. Plus, the government shutdown now in day 2. But don't expect a deal today. The Senate is out for Yom Kippur, so no votes until tomorrow. In the meantime, Treasury Secretary Scott Bessent telling CNBC that the shutdown could hurt U.S. economic growth. And Warren Buffett's Berkshire Hathaway just made its latest purchase. The firm reached a deal to buy Occidental Petroleum's petrochemical business for about $9.7 billion in cash. Berkshire Hathaway already owns a 27% stake in Occidental, which has been selling off assets to chip away at its debt load. The deal closes the book on a long chapter for Occidental. The company first entered the chemicals business decades ago, but sales in that unit have been sliding in recent years. Let's get a quick check in on stock futures, and you're seeing the Dow trading essentially flat after that record high that we saw at the close on Wednesday. S&P also secured another all-time closing high, surging above 6,700, and in futures trading, we are nearing closer to that $6,800 point level. So something to watch there as we continue to track all of these market moves. And then the tech industry also seeing a big boon. You're seeing NASDAQ futures up around 0.6%. But let's dive into these stories, which includes that tech trade. OpenAI hitting a $500 billion valuation, igniting a global chip rally, plus day 2 of the government shutdown with President Trump threatening federal layoffs as Congress remains deadlocked. And Trump now vowing to confront China over its refusal to buy U.S. soybeans. Joining me now, senior reporter Brooke DePalma, live at the NASDAQ, and Washington correspondent Ben Werschkul. And Brooke, I want to start with you on just the gains that we're seeing in the AI trade. What's the biggest sectors, the biggest names that are really bouncing off of this OpenAI news?
Yeah, now that we heard more about OpenAI's valuation, we are seeing this renewed optimism when it comes to the AI tech trade that we saw really over the summer. Following AI announcing this valuation, or rather, we're getting this report, we are seeing on the flip side, Samsung Electronics as well as SK Hynix also seeing those stocks move higher this morning. As you can see right now, they both signed letters of intent to really supply memory chips for OpenAI's data centers. Once again, this renewed optimism around what exactly OpenAI could bring to the table. Of course, it is still a private company, but we see both of these letter of intent really causing both stocks to rally this morning. In addition to that, we have other news around AI really driving some momentum behind trades we haven't seen in a while. Speaking of, AMD is a top trending ticker on Yahoo Finance's platform this morning, and that's basically because Intel is in talks to add AMD as a customer, so we are seeing some momentum there this morning, up about 3% in extended hours trading. And also, too, I do want to point out that Qualcomm, they shifted their chips to ARM Holding after a litigation with ARM. We now are seeing some momentum there. In addition to that, NVIDIA, there was some skepticism about that $100 billion deal in OpenAI and the circular nature of it. But now, based upon this fact that we are getting this higher valuation than expected around OpenAI, we are seeing NVIDIA move higher yet again this morning. And so all of these are really driving momentum behind that AI trade that we haven't seen in quite some time.
And clearly investors are optimistic here. We have stocks at record highs. You were just running through some of those tech names, but we do have some Wall Street watchers that are warning of frothiness, of overexuberance. What is the street saying? Are these valuations justified?
Yeah, what we're hearing right now is there's a few different factors going into what could lead the momentum to those record S&P 500 targets by year end. We did see the S&P 500 cross that 6,700 mark just yesterday at market close. But now what we're hearing, particularly from a UBS strategist, sort of saying, look beyond AI technologies, look into autonomous systems, look into humanoids, think beyond the AI picture, as really what this is all going to come down to is what exactly we see these Q3 earnings report, come out essentially to be. If they do yet again beat Wall Street's expectations. On top of that, you have to take into consideration that there's now nearly 100% chance that the Fed will cut interest rates, especially amid this backdrop where we do have this shutdown and limited data going into the October 29th meeting. And all of this, in addition, when we are seeing potentially higher yields getting attention there, that could drive investors out of the equity market and into yields. And so there's multiple different factors at play, but we have heard from multiple firms over the past month that they did raise their S&P 500 target for year end.
Yeah, and Ben, markets have been remarkably calm amid this gridlock in Washington, the shutdown now in day 2. Has there been any developments that either side is willing to blink here? And what's the whisper chatter on the Hill when it comes to the earliest that this conflict could be resolved?
Yeah, so for right now, the sense is this is a kind of intimidation game. Both sides are waiting for the other side to blink. We're seeing a lot of that, especially from the Republican side. They say they're not even going to negotiate. They're going to keep having votes that will fail in the hopes that moderate Democrats come on board. We saw a new front in that today. Donald Trump posted that he's going to meet with his budget chief, Russ Vought, to decide, quote, which of the many Democrat agencies to cut, saying these could be permanent cuts, these could be temporary cuts. It's part of his message that the shutdown is, in his words, an unprecedented opportunity. A lot of questions this morning about how much of this is an intimidation tactic. A lot of Democrats think it is, and whether if Trump follows through here, how much of this would even stand up in court. Cutting agencies during a shutdown is totally unprecedented. So that would be a major change there. But it sets to this overall dynamic where the Senate will be back tomorrow. As you mentioned, they're out of town today for Yom Kippur, but they'll be back tomorrow for another vote. The only way this ends on the short term is one side fully blinking. I think the growing sense here is that Monday is the earliest we're going to see actual negotiations if that's the way this ends. That's Monday is when both the House and the Senate will be back, and maybe there's talk on these healthcare issues that Democrats are saying needs to be talked on. But for right now, we're just kind of hammering each other, and one side is just waiting for the other to blink.
And Ben, you were just alluding to those Trump threats, permanently firing some of those federal workers. So it feels like then Washington's just looking at this as a negotiating tactic. Are they taking those threats seriously?
I think it's what's causing confusion. I can tell you that federal workers are definitely taking this seriously. There's reports of federal workers being sent home with computers in a different setup so that in their interpretation, they can be notified of these mass firings if they come. Russ Vought has talked about these beginning 1 to 2 days. He said that yesterday, so that means today or tomorrow is when these could begin. When you hear messages from other folks, it's different. Treasury Secretary Scott Bessent was on this morning and kind of dodged the question, saying there'll be ramifications, but definitely not saying we're going to see firings there. So it goes to this overall question of how much of this is a kind of hardball tactic. But I will underline, a lot of these are things Trump has wanted to do for years. Some of these issues and some of the actions they've already taken stretch back to his first term. So I think they see this as a double opportunity, a way to kind of muscle Democrats, but also perhaps get some policy priorities done if they stand up in court.
And Brooke, in terms of the investor reaction, we have seen certain asset classes on the move amid this shutdown, gold in particular. What are we seeing there?
Yeah, right now we are seeing gold futures up yet again as we make our way into the open. And gold has had quite the run this year, up more than roughly 47%, I believe, year to date. It's seen quite the momentum, as you can see on your screen right there. It's really seen as a safe haven among investors in this environment where there has been such volatility. And Goldman Sachs even thinking by year end of 2026 that we could see gold hit 5,000. And so there's been such momentum as investors really seek out safe havens in this sort sort of environment, and now take into consideration this government shutdown, take into consideration, that lack of data heading into the Fed, cutting interest rates, and just this volatility or volatile backdrop with tariff negotiations continuing, gold has certainly seen quite the momentum year to date, and we're seeing gold see a bit of momentum this morning, up nearly 0.5%.
And let's pick up on those tariff negotiations. Ben, even amid this shutdown that's still firmly in the background, we heard from President Trump. He signaled that he'll confront China at APEC over its soybean boycott. The White House also pausing those 100% tariff on pharmaceuticals as they continue to negotiate with other companies, hoping to strike a similar deal as to what they struck with Pfizer. So does this maybe point to a more practical or tactical approach on trade, and what are the implications as some of these talks fall through?
Yeah, I think that on the China side of this is clearly about expectation setting for this summit later this month. It's at the end of this month. Both leaders will be in South Korea, and they're expected to have a pull-aside meeting there to talk about this. The soybean issue and what we see in advance of these is oftentimes each side saying, this is my most important issue, this is what needs to be on the table. So there's a lot of expectation setting there. But I do think the soybeans are indicative of how pummeled, frankly, soybean farmers in the U.S. are getting right now. This is coming to a head this fall. There's a soybean harvest that, by all accounts, is is sort of at record levels, or at least really high levels. China is currently boycotting America's soybeans. Trump likes to blame Biden for this, but China started phasing out soybean purchases earlier this year, and it currently purchases 0 soybeans from the U.S. Other countries have picked up some of the slack, but on worse terms for American farmers. So this is clearly an issue for President Trump. Treasury Secretary Bessent this morning did outline what we widely expected, which is a farm bailout is coming. He gave at least timing of that. He says there's going to be an Oval Office meeting announcement next Tuesday there for substantial support for U.S. farmers. Exactly what those details are and how this plays into the China talks remains to be seen.
All right, Ben, Brooke, appreciate your insights. Thanks so much. Well, OpenAI has officially become the world's most valuable company. According to the Wall Street Journal, the company completed a deal with investors that values the ChatGPT maker at around $500 billion. The record valuation for the private company comes just 3 years after it launched its flagship product. The company has now surpassed SpaceX as the world's most valuable private company. Behind SpaceX, you have AI startup Anthropic, data intelligence firm Databricks, and payment processor Stripe. The sale speaks to the frenzy around artificial intelligence and the sky-high expectations for OpenAI. It is also a rapid jump from earlier this year when SoftBank agreed to lead a $40 billion investment in the startup at a $300 billion valuation. OpenAI's latest valuation gives it a market value roughly equivalent to ExxonMobil, which reported annual revenue of almost $350 billion last year and profit of more than $30 billion. The AI company, meanwhile, is expecting $13 billion of revenue this year and a net loss in the billions of dollars. That's according to the Wall Street Journal. Well, some breaking news crossing the wire. Tesla third quarter deliveries coming in above Wall Street estimates. The delivery number for the quarter coming in at 497,000. The average Wall Street estimate called for 439,000. The latest figures showing that the pace of Tesla's sales decline is slowing. This marks a big improvement relative to the first half of 2025 when vehicle sales tumbled 13%. Tesla has sought to steady its core business that's struggling with an aging lineup and also facing pressure from Musk's political views and a public fight with President Donald Trump. It's also grappling with the elimination of policies supporting the EV market. But today, Tesla reporting a surprise increase in quarterly vehicle sales, some if which could be driven by consumers purchasing EVs before those credits expire. So stay tuned for Morning Brief. More coming up next. Now time for some of today's trending tickers. We're watching Occidental, Fermi, and Equifax and TransUnion. First up, Occidental Petroleum. Warren Buffett seems to be back on the hunt. His company, Berkshire Hathaway, just struck a deal to buy Occidental Petroleum's petrochemical business for about $9.7 billion in cash. It's Buffett's biggest move since acquiring insurer Allegheny in 2022, and a sign that he may be ready to put his record $344 billion cash pile to work. The deal also comes as Berkshire continues to scale back some of its larger holdings, including its stake in Apple. Next, Fermi. Rick Perry's REIT Fermi surged 55% after raising $683 million in its IPO, giving the company a market value of about $19.3 billion based on outstanding shares. Fermi's stock debuted on the Nasdaq Global Select Market and is also set to begin trading in London. The IPO comes amid a wave of investor interest in power producers tied to the AI boom. Fermi's Project Matador is a development stage energy and data center campus spanning more than 5,000 acres on land leased from Texas Tech University. By 2038, the company plans to generate up to 11 gigawatts of power to fuel on-site computing centers using a mix of natural gas, solar, and nuclear energy. Finally, TransUnion and Equifax. Shares of the credit reporting companies plunged in early trading after FICO announced a new program giving mortgage lenders the option to calculate and distribute FICO scores directly to customers. FICO shares rallied on the news. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, the AI trade continues to power markets higher. Semiconductor stocks added billions in value after OpenAI's latest share sale pushed its total valuation to $500 billion. But my next guest warning of some risks to the rally. Joining us now is Michael Aroney, State Street Investment Management Chief Investment Strategist of the U.S. SPDR business. So, Michael, thank you for being here. Look, I mean, we have tech stocks powering higher once again, that OpenAI valuation news. What's your reaction to that and where we stand in this rally? Is there still more room to run looking out to the end of the year?
I do think there's still more room to run, Allie. I think the foundation for this bull market remains solid. I think trade is getting a bit clearer. I know it may not always seem like that, but now we're adding both stimulus, both from the One Big Beautiful Bill Act and monetary policy stimulus. And oh, by the way, earnings are growing by double digits and profit margins remain high. And the U.S. has never entered a recession when earnings growth has been rising year over year. So there's a lot to be happy about. The AI spending, a big tax refund next season. Of course, the U.S. is hosting the World Cup. So all this is fueling the optimism and the bullishness from my perspective. So I do think this rally has legs, but of course, there are some risks.
And let's talk about some of those risks. What do you think are the biggest risks to this rally? And you also said that even though valuations this high can continue, markets may be due for a correction, even if we don't see one.
So, Allie, I think the discomfort that I have is that the market's up more than 30% since the April lows. And the max drawdown, the kind of worst from high to low period that we've had, has been less than 3% over that time. And that happened way back in May. So we know trees just don't grow all the way to the sky. There has to be some healthy pullbacks in order for the rally to continue. And we just haven't had many. Even today, European stocks are hitting all-time highs. South Korea hit all-time highs. So it's not just a U.S. phenomenon. So the risk appetite has been very, very strong. So valuations are stretched, prices are high. So I think some of the risks include trade policy could be an impact. Certainly earnings disappointment. Third quarter earnings will start to get released in a couple weeks and the bar has been raised. So I think this poses some potential risks of disappointment. What happens if those AI hyperscalers and other companies don't meet what's been growing expectations? And then finally, I think the Fed finds itself in a difficult position where inflation remains above target, yet questions are kind of arising about the economy and the labor market. What happens if they're cutting too aggressively at a time when inflation remains stubbornly high? To me, those are the three most identifiable risks to this rally.
And I have to ask this question, and I feel like a broken record, but it is the number one question on investors' minds right now, bubble risks. You were talking about some of those stretched valuations. Are you at all concerned that there's too much frothiness entering the fourth quarter?
Overall, I don't think we're in any type of bubble territory. This isn't the technology, media, telecom bubble of the early 2000s. These companies are incredibly profitable. When I look at the S&P 500 in aggregate, and of course, this is influenced dramatically by the Mag 7 in the tech sector, companies have a return on equity of north of 20%, free cash flow margins north of 10%. And they return more than 70 cents of every dollar earned through either dividends or net buybacks. These are incredibly profitable companies with healthy balance sheets that are generating a tremendous amount of free cash flow. That's a big departure from bubble-like conditions that existed earlier this century. So as long as that continues, I'm not sure we're in bubble territory. These companies demand a premium. The question is how big or how much should that premium be?
So how can investors play that, be exposed to AI without being too far into some of those more frothier corners? And I know you expressed a barbell strategy of sorts. So what does that look like in practice?
So from my perspective, given our bullishness about the potential for this bull market to continue, but some of the risks we've identified, having a barbell strategy in your portfolio makes some sense. So on one side, given our enthusiasm for earnings growth and the AI phenomenon, we would suggest continuing to be overweight areas of technology, communication services, financials, where they're highly profitable, earnings are growing, and they have a kind of an attractive outlook from that perspective. But in order to offset some of those risks, we think there is a potential for both interest rates and inflation to remain a bit more volatile and higher than the market expects. And so that proves problematic for those bond portfolio allocations. So we think having a diversified portfolio of real assets, infrastructure, real estate, commodities, natural resources, and precious metals, including gold, help to manage or offset some of those risks. So that's the second part of that barbell, Allie.
So we'll see if any of those risks materialize, but we do have the S&P on track for yet another record close. Michael Aroney, thank you so much. Appreciate it.
Thank you.
Well, coming up on Yahoo Finance, opening bid, our own executive editor, Brian Sazzi, joins us now. So, Brian, what do we got today? There's a lot going on between OpenAI, Tesla, and everything else.
Well, you just listed everything, Allie. Back to you. No, just kidding. We're going to dig into an interesting call on PepsiCo, which is being attacked by an activist investor. We're looking at an interesting call out of Citigroup on all things crypto. And then, of course, Allie, government shutdown. The markets are shrugging things off for now until they don't.
All right, love that deep tease, but that does it for Morning Brief. Much more ahead on Yahoo Finance. Stay tuned.